Hi, and welcome back to the WHVP podcast. In this episode of the podcast, the WHVP team sits down to discuss the Federal Reserve and the Swiss National Bank and how they relate to their economies when facing similar situations and also in different economic situations. Before we get into that, we'll discuss the releasing of the CPI data, or the Consumer Price Index data, that was released at the beginning of June. Now, let's get into it.
So guys, welcome back to the podcast. We're excited to be doing this episode again, finally in person. It's been quite some time.
Yes.
But happy to be here. And today we're going to be talking about the differences between the Swiss National Bank and the US Federal Reserve, which is, I think, quite an interesting topic to see how two different central banks deal with similar global movements or trying to deal with different economic environments, but also different forces that come on the outside. And before we get into that, we're going to talk about the CPI data that came out on Friday for the US, and also kind of give a Swiss perspective as well. And the CPI is inflation data, or the Consumer Pricing Index, to see where the prices of goods are going, or if they're going up, going down, what's the trend there. So maybe Urs, you could kick us off with talking about the Consumer Price Index data that came out a little bit on Friday.
Yeah, I think to sum it up in one sentence is the forecasts were wrong again. In April, the expectation was that it would hit the top and will come down again, and now we learned that it increased even further. So in the US, it's about 8.6%, which is the highest for over 40 years, and which does really hurt a lot of people.
Yeah, I think that's something that is. We talk about the value of money here often and preserving it over time, being long range focused, and when you see inflation like that happening and persisting, not being momentary inflation or transitionary inflation, as they're not saying anymore, but as Janet Yellen and Chairman Powell talked about, saying it was transitionary, and we clearly see now, even though we didn't really think it was transitionary, we see now that we were correct, and that they maybe used the wrong word when talking about that inflation.
Yeah, and I think it's also interesting to see how like the national banks and experts talk about, because for them it's a very kind of abstract, very theoretical issue to discuss. But if you're staying in life, if you have a salary you have to live with, if you have to drive to the gas station every day, and really have to manage your own budget, then it really hurts you. And we have also seen last week when the figures came out, it does not only hurt the people who have to live through their life and make their expenses, but it also has a huge impact on the markets. Mm-hmm. I mean, the Nasdaq dropped more than 3% on Friday, and it doesn't look like it is changing soon, because the national banks, of which we talk later about, they don't really have a lot of wiggle room to act against that.
Yeah, I think there's just been policies for so many years that they've put themselves in a corner, and it's a challenging corner to get out of, and it's going to be a challenging time, I think, when trying to deal with inflation and how they used to think about it. I always had the feeling the Fed didn't think about inflation so much. They're always more worried about creating jobs in general. And to be fair, we haven't had that inflation problem in a long time. And maybe they had just thought, okay, we think it's stable now. The people's mentality over money is going to stay stable, and this is what happens.
Yeah,
unfortunately.
and I think it's not just like the chairmans at the national banks that haven't really thought about it. I think a lot of younger retail investors also have never thought about it, because as you mentioned, I mean, we haven't seen inflation in that realm for about 40 years. So for the past, 10 years or even more now, we had very low interest rates, we had very low inflation, and that's an extremely advantageous situation to make money, to be in the stock market. And as we also saw last year, I think we also spoke about all those Robinhood investors and the people who exchanged views on Reddit It was very easy to make money, and everyone thought they're an market expert, and everyone thought it was super easy to be a stock market guru. And now we see that, the wind's changing, and I think really having a lot of experience and a long track record shows its value again, because we are in a much different situation than we were a year or 2 years ago.
Yeah, and I think that's where, how do I say this? That's why it was so unpopular for whether it be politicians or even, like you said, market experts to call for some sort of contractionary policy or something that might damage the potential to make huge gains at the stock markets. However, when you look at it, or you approach investing as, hey, I'm going to be invested for 40 years, you really start looking at more of those details of what's the risk of inflation eating at my wealth. That's when you start to pick up these things versus, oh, is inflation at 4%, but GDP is at 6%, that's okay, I'm going to make money this year. And that long-term perspective versus that short-term perspective, and how to be, I guess, more cautious in what you do on the markets, and take your time, do your due diligence there.
And I think one important point why we even are in this situation is because, during the last 30 years, we had a lot of growth in the economies, and as a concept of inflation, if you print money, or if you create money, it has to hold up with the growth of the economy. And due to the restrictions we saw in the last 2 years, combined with the extensive printing of new money, that the equation doesn't add up. And I think that's where we are now, that politicians and central banks realize, maybe it's not like the modern monetary theory that it works, that you can print as much money as possible and the growth will come with itself.
And I think the whole monetary policy is the lockdowns added a new variable there that we didn't have before, and I think that as you said, if you do that, these are the consequences, and I think we're starting to see them now. It is important to see that we still have a lot of lockdowns, especially in China. Shanghai was closed until last week, and now corona cases, they increase again, and we will see how they react. But like the distribution cycle or the supply chains, they still don't work properly, and that's a huge issue. It certainly is, and something we'll definitely be keeping our eyes on as we move forward, and I'm sure our listeners will also be keeping their eyes on it, as it's quite the hot topic at the moment, unfortunately. Let's now transition into our topic for today, which is the Swiss National Bank and the Federal Reserve, and kind of what their differences are. I'll quickly just give a real short historical background of the Federal Reserve and how it even came to be. Alexander Hamilton was actually the first politician to try to establish a national bank, and that started in the late 1700s, going into the early 1800s, and it failed after 20 years. The people of the United States and the other politicians were not such a big fan of it. So after about 20 years, it went into insolvency after it lost its charter by the government. It tried to go private, but didn't pan out. And then again, about 2 years later, they tried to do it again with the second Bank of the United States, and it was a very similar track as the First National Bank. And after 20 years, after it lost its pact with the government, then it tried to go private again, and then went insolvent at the end. And then in the 1900s, in 1913, I believe, Woodrow Wilson signed the Federal Reserve Act, and that established the Federal Reserve to control the monetary policy outside of the Treasury Department, but they were still at that point quite connected to the federal government. They would, after it was started, we had both the world wars that kept the government and the Federal Reserve quite connected in how they ran monetary policy to try to deal with paying for the war and the expenses that they had when they were involved. And then in the late 40s, so I believe it was 1949, they enacted a law that would cause the Federal Reserve to be independent from the United States Treasury Department, so that it was allowed to act independently with its tools of raises and interest rates, to deal with just I guess that the if there was that there wouldn't be a single voice dealing with financial policy or monetary policy in the U.S. So now there's two force mechanisms that could help control the inflow and outflow of money, as well as supporting markets and the economy in general. What's really interesting is even just a year after they kind of got their independence, there was a really big push by governors and politicians, in specific from Texas, to bring the Federal Reserve back underneath the government. And so that lasted for about 20 years, this fight back and forth, and until that politician who was leading the charge kind of was out of politics. And since then, it's been quite an interesting thing to see how the Fed controls their policies. They acted quite independently during that time when they were being attacked, trying to be brought underneath the federal government. There was quite a lot of discourse between the president and the Fed chair, but for the most part they acted quite independently. And then under Bush, the Bush, like from Ronald Reagan through Bush, there was quite a lot more working together, and some people argue that was part of the reason that the 2008 crash happened. I think it's way too many. I think there's way too many other things involved to say it was the Federal Reserve's fault. But yeah, so that's just a synopsis of the Federal Reserve history, kind of how it got started, and how we are where we are today, and it being independent. I think Biden last week 2 weeks ago met with Chairman Powell, and he openly said we'll see if he acts on it, but that he's going to let the Fed be independent and support that. So let's hope he does that and the Fed gets to continue acting independent. But yeah, maybe Jamie, you could tell us about the history of the Swiss National Bank a little bit.
Yes, absolutely. So the Swiss National Bank was established around the same time, a few years before, in 1907, and to my knowledge, the bank was from the beginning established as an independent entity. The Swiss National Bank is a little bit different from the Federal Reserve, and I hope I'm not getting too much into your topic, but in a sense that it is headed by three people. The council consists of three people with a president, and that president has, in contrast to the Fed, a lot of accountability, because he or she stands for decision that the SNB makes, so it's easier to point a finger to a specific person, and I think there's probably advantages and challenges to that, but it's a little bit different to what we see in the US. And then also the member of this council, they are not appointed by the parliament, but by the federal council. And our federal council, for our US listeners who might not be familiar with the concept, they equate to being the presidents essentially of the country. So we have 7 departments that are each headed by one person, and then those 7 people together would be having the same or similar powers to the president in the US. So they together as a council appoint the smaller council to the Swiss National Bank, and I think it's quite interesting that in the US it's easier to point the finger to the president because that's one person, but with the Fed, I mean, yes, we have Powell, of course, but there's still several people involved there, and it's easier to hide behind the majority vote on something. And then I think another thing that's important with the Swiss National Bank is that their main concern is price stability, so they are aiming for an inflation target between 0 and 2%. Even though we're now not in that bandwidth anymore, I think we're, as of now, about 2.9% in Switzerland, which is still a lot better than a lot of other economies, but it's not within the goal range anymore. So those are some of the bullet points about the Swiss National Bank. I'm not sure, Urs, if you have anything to add on the topic.
On which topic?
The topic of the Swiss National Bank and its histories and how the bank is set up.
No, on the history, I think he gave a great summary.
I think one other point that I haven't mentioned yet is how the structure is set up, like who owns the bank. That might also be important. So I think about half of it is owned by the cantonal banks, or like the state-owned banks, and then the other half is owned by private shareholders. So it's possible as a private person or as an institution to buy shares. They're publicly traded, or at least a portion of them is. So that's about the ownership structure as well with the SNB. And
It's not only the cantonal banks, it's also the cantons themselves.
Right.
So there's
Absolutely.
quite a considerable part of the distribution of the dividends goes to the cantons and helps them with their budget.
Yeah.
But it's important to say or to mention that the government itself, they don't own any shares.
Yes.
The federal government.
The federal government,
Yeah.
yes.
The cantonal governments can, but
Yeah.
the federal government does not own it.
Yeah.
That's quite. That's,
Yeah, and I
that's very
think
interesting.
the independence aspect is something that is very important to Switzerland and to the Swiss people, and something that is taken quite seriously. At least that's how I perceive it here. I don't think the government really intervening is really an issue. I think they respect the independence too much, which is something that for me personally is very reassuring, knowing that the power is split up and that the central banks can actually do what they're appointed to do and work towards that goal without being under political pressure that might come from the wrong places.
Yeah, right. I mean, they have some space when it comes to make political moves as well, because for the Swiss National Bank, it is price stability, which is, as you said, 0 to 2%, but close to 2%, but not more than 2% inflation. But when doing the monetary policy or defining it, they have to take into consideration the economic circumstances. And I don't know whether it is fair to compare the Swiss National Bank to the Fed, because the countries are very different in a way how big they are. I mean, we also have a lot of similarities. We have talked about that in another podcast. But I mean, if you have a country with 300 million people or one with 8 million, 8.5 million, that's a huge difference. I mean, it makes stuff easier, but also more complicated. For example, the US, when they make a decision, they don't really have to care what other countries think about or how other countries act. And the Swiss National Bank, on the other side, I mean, we export a lot of stuff. So that means that the exchange rate matters to many small or mid-sized entities. And so they have to take care that it is in a range where people still buy stuff from Switzerland and are not hurt too much or harmed too much by a too strong Swiss franc. And as a consequence out of it, they have to take into consideration how the European Central Bank and the Fed and the Bank of Japan and other countries or other central banks act. And as you said, like Switzerland really has this one target, and the Fed has two targets. They have price stability and unemployment. And the unemployment, like the unemployment side, there was a lot of focus on that in the last 2 years because of Corona and the measurements and the lockdowns. There was a lot of unemployment. I think it slowed down to about 50%. Not percent. No, I lost it. So the unemployment figure, it was around. No, it went up to, how much was it again?
Ooh, I think it was around 8 or 9%.
Yeah, 8-9%.
It's quite high.
Yeah, right. So now I got it again, and it came back to 3.6%. But there is another figure, which is the employment rate, and the employment rate was about 64 or 63 before the coronavirus hit, and then it went back to about 50, and now we're around 59, 60 again. So, depending on which number you're following, if you following the unemployment rate, they did a great job. But if you follow the employment rate, they are not that where they were, and so I think that there is a lot of politics involved, and it is very difficult to make this or to find the right path between price stability and the unemployment, because now they have low unemployment, but they have a very unstable price structure. I mean, oil went up like 20-30% or even more, depending where you are, and the goal would be to have a stable price in the long term, and that's not what is currently happening.
Yeah.
Yeah, I think one important point that you made a few minutes ago is about the pricing power of the Swiss franc and how strong it has been historically and also it still is, and that the national bank really has to intervene to make sure that the pricing stays in a stable range, and that sometimes other countries like the US are not so happy about it, and that they point out that the currency is being manipulated because they don't understand or don't want to understand how important that topic is for the internal economy, and as I said, for small and mid-sized companies to be able to do business with other countries in a sustainable manner.
Mm-hmm. Yeah, I think on that point, what I find always almost humorous about the reaction that comes out of the States about the Swiss franc having a strong currency is how Switzerland tries to not let it get too strong, and how that upsets the United States. I think that's so. It's for me. It's like, well, why does it matter? I mean, okay, yeah, the U.S. is top dog, and they act that way. Sadly, I think that's to point out that someone's currency is being manipulated. All currencies are being manipulated to a certain extent. That's why central banks exist. They're trying to use tools that they have in place to not let things go out of control, to try to create a stable environment. And where 9%, well 8%, 8.6% inflation is not great for the US. You know, we've seen times in history, I mean, we can look at Venezuela or Turkey at the moment where inflation is through the roof. I mean, 10 times what we're seeing, you know, in the US. And there's been times in the States where it was crazy high as well, and they had to try to use these mechanisms to control it. And so I think people have to understand I see a lot of, or even in the States, you hear a lot of bad talk about the Federal Reserve and bad talk about central banks. And I understand when you go to the gas pump and you're paying so much more and you think, well, what are these people doing there affecting my life? And yes, it's very frustrating, and I disagree with a lot of the things that they do sometimes. However, you also have to remember the 10 to 20 years that you had where gas prices were at a good level, where the currency was, for the most part, stable. And I think that's a point that really has to be put out as well, is that it's not 100% bad, but there's a mix, and it's challenging to, as you mentioned, the difference between Switzerland and the US is the population size. And it's really tough to try to put borders on a country of 300 million people with businesses that are functioning globally in a global economy that's insanely huge. And so, as you mentioned, yeah, maybe Switzerland is a little bit easier to use those control mechanisms, but in the States they're using the same ones. What do you guys think about when you think about how the Swiss National Bank works and price stability, how they focus on that, and the Fed focuses, you know, on price stability and unemployment? Do you think unemployment is something that's valuable for a central bank to look at, or is that something that you think maybe some of the problems could be dealt with in a faster way, a more efficient way, if, let's say, the Fed acted more as a Swiss National Bank, where they're really looking at what's the price stability as a metric for themselves?
I think or unemployment is a very political issue.
Yeah.
And so the government, they take care of it, no matter whether it's also a topic for the national bank. And so I think this is where the issues come up in the US, that the central bank says, okay, we have to take care of it, and the government says, yeah, we want to be re-elected, so we have to take care of it. And in Switzerland, you really have this one focus, and like everything else, the government takes care of it, and they have to have these kind of challenges, and the central bank can really focus on what they do with price stability. Obviously, they have to work with in the best interest of the country, so they have to take into consideration the unemployment rate. They have to take into consideration like how the economy is moving, but these are things like they know we have to adapt in a way, and the Fed has like more power in this way, that they say, okay, now we are going to lower interest rates so that the companies can spend more and hire more people, and from a Swiss perspective, that shouldn't be the task of a central bank.
Yeah, I agree. I mean, there might be a little bit of bias there because that's just what I'm most familiar with.
Yeah.
But yes, I think it's better to have one specific goal and work towards that. And as Or said, I mean, they need to have like a 360 view of what's going on in the country and in the economy in general. But I agree that unemployment is a very political topic, and the less political a central bank is, the better. I think the less attached it is from re-election cycles, from politicians' pressure and all of that, the better it is. But yes, might also be because I just have never experienced the other system in person.
Yeah. I mean, we're a Swiss company, we're a Swiss podcast, so I'm going to leave my political beliefs at the door, or my values, I guess I'd say. And I also agree. I think with one direct goal, the central bank would have a much better chance, or be able to do their job in a much more efficient way. And I think also the politicians then could do their jobs more efficiently. Now we'll see how that goes, as always. But yeah, I agree, and I think it's something that's worth talking about because at the end, we the people are invested in our companies, our countries, and what they're doing. And we both, being from Switzerland and the US, we have a lot to say, to a certain extent, with our voting rights and the people we elect. And so I think it is good to pay attention to what's going on and to talk about these things. I think it's very valuable.
Yeah. But it makes it very difficult at the moment to invest because it's very hard to see where this is going and how long it will hold up. And as we said, there was not such a situation for a long time. I mean, there was a situation similar to this in the 80s where inflation, or 70s, where inflation got out of hand, and then there was a harsh reaction to that. And I think that at the moment it shows us that we have to stay humble and that we have to focus on the basics and not think we can do whatever we can, and eventually there will be some kind of event that everything disappears.
Yeah.
So we really have to make sure that we stay the course, that we don't overreact in some way if new figures come out, if inflation is higher than expected. I mean, if the basics are right and if the time horizon is taken into consideration, I think it's still able to build a portfolio that holds up in the long term.
Yeah, absolutely. I think, staying humble and being humble is an important thing when investing, and something that maybe got a little lost with all the emotions over the past couple of years. But I think you as our investment officer also shouldn't sell yourself short, because we have been very well positioned for what has happened. And our clients who may be listening also know that we have been quite cautious and conservative, and that we had looked at the underlying values of our companies. So I think considering everything that's happening, yes, it's a very difficult environment, of course, also for us, but I think the time has also shown the value of having a professional investor that is detached, emotionally a little bit more detached than you'd be if you invest your own money, and what a long-term approach and also a conservative approach, what kind of effect it can have during turbulent time, and how much less money you might lose if you go into the market with a sustainable long-term approach and don't get swept up by greed or any other emotions during high times.
Thanks again for joining us on the WHVP podcast. We hope you found it enjoyable and insightful. If you would like to learn more about what we do at WHVP and how we might help you achieve your financial goals, check us out at our website at whvp.ch, or find us at any of our social media handles at LinkedIn, Facebook, Instagram, or YouTube by simply searching WHVP. Have a great rest of your week.